Welcome to the Debit This, Credit That podcast with Wheeler Accountants located in San Jose, California. In this podcast, we discuss how to solve accounting challenges in both your personal life and your business. We take an energetic, tech-savvy approach to solving accounting challenges that steal your focus and your time. Now, on to the show with your tech-savvy accounting experts, Matt Wheeler and Michael Bryant.
Welcome to episode 24 of the Debit This, Credit That podcast by Wheeler Accountants with your hosts, Matt Wheeler and Michael Bryant. Today we have our second guest ever on the podcast. Our first was Brandon Knapp, who we just recently released episode 23 with him just a couple days ago. It's a very good podcast. We're very excited to have our second guest here, Mark Caufield of Cook, Disharoon, and Greathouse Insurance. Did I pronounce that right?
That is correct.
I just go with CDG usually. It's much easier.
Correct.
CDG is a full-service independent insurance brokerage specializing in insurance, surety bonds, risk management services to individuals and businesses. CDG's goal is to protect their client assets and help prepare for unintended events at an affordable cost. And prior to getting in the insurance business, Mark was actually a golf professional working at which country club?
Blackhawk Country Club.
Blackhawk Country Club. So Mark is not only excellent insurance broker and agent, he is an excellent or amazing golfer. So you want him on your scramble team for sure. We have a couple of topics we wanted to get into today with Mark. I think we're going to cover some stuff on personal insurance, things to look out for, things to be prepared for, tips and tricks, best practices, and then we'll get into some business insurance coverage issues as well. That sound good?
Sounds great.
So on today's podcast, we're going to cover a little bit about personal insurance, go over some tips and tricks, best practices, that sort of thing, evaluating coverage, and then we'll get into some more business insurance related topics and that sort of thing. Starting with the personal insurance, I think one thing that's been in the news a lot lately is these natural disasters, and you see a lot of people affected by them. Terrible fires up in Northern California and Southern California, really. The flood down in Santa Barbara, the mudslides. And so insurance obviously is a very important thing to have, and it's one of those things where you only need it when you need it kind of thing, and until then you're just paying and it feels like you're paying for nothing. But it's really important to have the right coverage in place. And Mark has brought some interesting ideas to some of our networking group meetings we talked about, and I thought they were really great. Maybe we should cover some of those in the podcast. So if you find yourself in a situation where you experience a natural disaster and your home or your assets are affected, Mark, what are some of the things you want to do or be prepared for if that does happen to make the process go a little smoother?
Well, yeah, I think the first thing is to get out safely. But big picture is whenever you can do things in advance to prepare your home, your family, or otherwise for what possibly could happen or otherwise. One of the, I think, tricks that I think is absolutely vital is to videotape once a year your entire, I would say, inventory of your house. Just walk around with your cell phone and just kind of dictate into the phone the different items that you have, especially any, once you've made a copy, any new items that you might have purchased or otherwise. Because in a loss, one of the things you'll be required to do is to document what personal property that you own. And it's incredibly difficult if you're in a large fire like that and everything is gone and there's nothing but ashes to try to remember all the things that you have and be able to recover them. So
do you do like a full spreadsheet of just all the items in your house, and what kind of information do you need to have?
Well, I'm sure there are some people that will do the spreadsheet, but mostly if you can just do a video, cell phone video, open cabinets, talk a little bit about what's in there, open drawers, just take a wide scope of it. It will give you enough of a reminder to make the process so much easier. And a lot of times you can give those videos directly to the adjusters, and they may even do the work for you at that point. So that's a big help because, there's a lot that goes on in a large fire like that, and it's the most useful bit of time you could spend is to spend 10 minutes walking around your house with your phone.
And so there isn't some kind of just general allowance to cover, say, like dishes or maybe my wife's shoes.
Yeah, in the final settlement, you have to detail it. And so they will give you a little money up front, but then eventually you have to show that you've lost, you owned it in the first place and that you were entitled to it.
That could be quite a challenging task, so I could see the benefits of having a video.
Right.
So you spend 10, 15, 20, maybe half an hour once a year. You recommend doing this just to
Once a year.
video up with everything that's new and dictate it, save the video file somewhere, not on a hard drive in the house that also burns down.
Correct. Not in a hard, nowadays in the cloud somewhere, put it out there somewhere that you can find it, and you can easily save yourself days and weeks and potentially extra expenses that you might have to pay to hire services to help you try to detail this information.
So if you don't have a good inventory or a good video that shows a lot of this, all the assets in the house, you can hire a service to help you go through the process?
Yeah, there's basically services that will kind of guide you through it, remind you, help you, sometimes go through records for you. Depending, each insurance company is going to require a different level of detail, which is part of, going back to a point is that insurance, personal insurance, sometimes might seem like a commodity. Hey, I'm just buying a price. What's the best price I could get out there? Well, each insurance company has, different standards that they use to prove this stuff, and they have different coverages, different policy quality.
Exclusions.
And everything about the policy sometimes can be different. And one of the pieces of that is understanding what kind of claims process they might have, these insurance companies that you're choosing.
So depending on who the carrier is, they have a totally different way you go about making a claim and the ins and outs. Is that the part that you guys help with, walking your clients through that?
One of the benefits of our agency is we still have in-house claims department. So we will actually walk with our clients through the claims process in more detail than what you might see nowadays in a lot of insurance brokers. We have experienced professionals, 20, 25 years of just doing claims that make sure you're getting treated the way you should be treated.
So you're not just giving them a 1-800 number. Oh, I'm so sorry your house burned down, but here's a 1-800 number to call.
Correct.
For the service where they help you inventory the assets, does the cost of that service get reimbursed by your insurance proceeds, or that's something that's going to be out of pocket for you?
It's generally going to be out of pocket. As a general rule, it's an extra service. It's like
how much is that going to run you, roughly?
Obviously, it depends on the size of your house and the number of hours that they do, but it's expensive and it's big time savings. All I can say is go video your house
at least, right?
Yeah, thousands. Go video your inventory.
Sounds like a cheap solution. We've heard a lot about the floods down in Santa Barbara and the big mudslides. And what I was hearing was a lot of those homes weren't actually insured. Can you tell us about what types of coverage you would need for a mudslide or that kind of natural disaster?
So the average homeowner's policy would not include the mudslide. They would have to buy a policy called difference of conditions, which is basically it could include flood, it could include landslide, and it could include, in some cases, earthquake, all in one policy. That's a possibility, just a difference in conditions that just covers the landslide. So if you have a house that's in a possible area that you could have a landslide or you're worried about it in some way, you should explore that as a possible option. Not every home is going to be qualified for it, but it's definitely worth the time to explore it.
This is what you're talking about. Insurance is not really a commodity, and it's tailored pretty specifically to different policies, have different exclusions and coverages and that sort of thing. And you really want someone who knows what they're doing to navigate that to help you through it, right?
And someone has basically the resources and the experience to figure out the differences. I mean, the homeowners policies, even though on the deck pages, they look like they're covering the same items, the way they might be covering them is significantly different. I think one of the largest or one of the most common uncovered claims in California right now is a claim called water and sewer backup. A lot of people assume that if their toilet overflows and ruins the walls, the floor, and everything else, that it's going to be automatically covered.
And that's not normally covered in a homeowner's policy?
It's not a standard part of the California homeowner's policy. It needs to be added by the carrier. Carriers charge for it in a lot of cases, and they also limit it in a lot of cases. So understanding that part of the policy and how much coverage you have, if any, is important. And exposures, you get a 2-story home, that can get very expensive if it starts to back up in the upstairs. And just think of water flowing down and you having an exclusion on your policy for it.
So if you're a general individual out there with a home, you're not going to really be aware of all these different exclusions and additions to policies and that kind of stuff. So what is your process, or how do you go about evaluating the coverage for your clients? And do you go to their house and walk through all the different things that could happen? Do you have like a checklist, or how do you guys do it to make sure that you get the right coverage for the client?
Yeah, so we do a little interview. First of all, in some cases we do go out to the house, and in other cases we have a checklist. We have a very robust conversation around different coverages and different risks. I basically have a survey that they take if they have the time. It helps us identify what policy forms might be most advantageous to them. I'll give you a really quick anecdote. I have a client who happens to be sell pain pills for a living. Basically, is a pharmaceutical rep. Has teenagers, basically. And one of the issues that she worried about was what happens if someone gets into these samples with all the people struggling with opioid addiction.
Yeah.
It's a real issue in the way that about 70-80% of the policies out there, once a person takes a prescription that they were prescribed to, will exclude it in the policy.
Like an auto policy? Or?
No, like a homeowner's policy. Let's say you had prescriptions in your house and they were taken by somebody that they weren't prescribed for. That is an illegal use of a drug, and therefore it's excluded by the policy.
What would the claim be there? Or is it like then the person burns down the house and now you can't?
You didn't protect the prescription from your neighbor's 17-year-old kid, for example, or something like that.
So like an umbrella wouldn't cover if you got sued if that happened or something?
Generally, no, the answer is no, because the underlying policy excluded the incident in the first place. So having to understand the quality of the form and what that policy is doing and your risk. In this particular case, this client knew their risk through our survey, was able to identify, hey, that was something I really needed to make sure. And that narrows down the limits of products that we would recommend for her. So that's kind of how it works for us.
So you have the survey or questionnaire they fill out and they answer yes to this question. That's a red flag to you that, okay, well, that's going to immediately wipe out a third of the possible policies because these ones don't work with that.
Or the other thing, risk management is another thing about it. If she wants to choose one of those other policies, we might offer it to her with the advice that it's not going to cover this, so you need to deal with that risk in a different way.
And you mentioned umbrella policies. How do you utilize umbrella policies? Maybe explaining to our listeners how an umbrella policy works and then how you can effectively utilize an umbrella policy.
So I think the better way of stating it is that the umbrella is probably the most bang for the buck in insurance these days. And what an umbrella is it's another layer of liability on top of your current liability. Okay, so your underlying liability for your home or your auto, and they say it's a rough estimate that you should have liability coverage of 1.5 times your net worth. Okay, so if you have 1.5 times your net worth, a lot of times the max that somebody could have as an underlying policy would be $500,000. So they buy umbrellas. They go up, everywhere. Basic first one is $1 million. They go up, 50 million. Umbrellas based on what your needs are within your house, and we'll evaluate that with the client, and then sometimes we help utilize accountants to help us do that. We take the umbrella. The umbrella is a way for you to protect your family's net worth.
What are the kind of things that are normally covered under the umbrella, or is it very broad coverage?
Well, the way it really works is that if one of the underlying policies, for example, your home or your auto, was covering it and ran out of limits, okay, let's say you get in an automobile accident, it was covering it, you didn't have enough money to pay for the injury of somebody, then the umbrella automatically covers it. It's generally called something called followable form is generally what you see in the industry right now. Many years ago, it was a little broader, but it's less broad now than it was, let's say, 30 years ago.
So an umbrella really works in conjunction with a homeowner's and or a car auto policy.
Auto, boat, RV, whatever the other policies are.
So not necessarily covering you in any type of business situation.
It generally does not, unless, for example, there are underlying home policies that extend some coverages to businesses, and they, in that case, would.
So that's a good tip about the 1.5 times net worth or your gross assets, basically. That's a good tip, using the 1.5 times assets, right, as a kind of a rule of thumb, because I think that changes constantly for people throughout the years, and insurance is not like a set it and forget it kind of thing. You want to be looking at that on an annual basis and updating it and revising it, because if your assets grow substantially, the umbrella policy you had in the past may no longer be sufficient, or your risks just may go up as your kids get to driving age. And if you have a decent sized net worth and now your kids are driving, you're an attractive target for people in terms of, they're going for the deep pockets when they sue, right?
Absolutely.
So having the bigger umbrella policy is a good idea. That's relatively inexpensive too. Like, as you said, the best bang for the buck, right?
Yeah, it really, for what you get, it is, no question, the best bang for the buck in insurance, right?
And how do you kind of address that with your clients as their situations change? Are you doing an annual review, checking in? How does that work with your company?
Yeah, so it's a couple different ways. We try to communicate in different ways for different individuals. Sometimes we send out a survey that basically says, remember to check these things, and then we set a call up as well to go over it. In some cases, clients prefer to be seen in person, and then we'll come and see them in person. We try to meet the person at their level of what they need and how they want to review this, but we are constantly getting them to every renewal year. We're trying to get them to revisit this.
Be really proactive, and this is not.
You're checking annually.
We're checking annually, but we're also being clear in different announcements that we give them to, hey, add that car that you just bought. Going back to the quality of the form and the quality of the insurance, each carrier has a different rule as to when a car is automatically covered and for how long, and making sure that our clients understand that, and when they buy their product, that's a big part of what we try to make sure that they're aware.
Effectively using their insurance.
Yeah, effectively using their insurance and effectively protecting them, because we're a fairly large agency when it comes to personal lines, and we've seen our clients. We get our clients a lot of times from other brokers that didn't do things that our agency is set up to do. And in one case, I had a client that had a teenage daughter, bought her a car, forgot to mention it, and she got in an accident with 7 other cars, and did not have an umbrella at that time, and did not have the car registered, so there was actually no coverage at all for the accident.
Nothing at all.
Nothing.
What's the typical time frame for when you need to report the new car? I mean, I assume you would do it right away. You should think to do that right away.
Everything from some carriers on the low end. I'm not going to name the carriers, but some of the carriers that you would think that you see a lot of advertisements with, they have unique rules where if you have a car that you're replacing, they'll cover it automatically. But if you're adding another car to your fleet, it's not covered. So some cases it's not covered at all. In other cases, it's generally 10 to 30 days, depending on the carrier.
Okay, that's a good thing to know.
Yeah, that is a good pointer.
So I think I would be remiss if I did not ask you about earthquake coverage. because we get this question a lot from our clients, especially during tax season now. And people are just curious, I think, in general. There's a lot of opinions out there on, is earthquake coverage worth it? You hear it's expensive. You hear it doesn't actually cover what you think you're going to need it for anyway, or that it does. So do you have any general thoughts on earthquake coverage and some things that people should be keeping in mind?
I think, first of all, and you've probably seen a lot of advertisements in the paper, in the papers and the TV. It's, earthquake coverage changed about 2 years ago and allowed a lot more options, and we definitely have more ability to make it affordable in some regards. You can buy a policy now that it may not be everything you want, but it can cover you in some regards. The more equity you have in your house, the more we generally recommend it. The more we see the accountants recommend it.
So 2 years ago, earthquake coverage changed substantially, and now it's more affordable than it used to be. Is that what's going on now?
That's correct. Basically, the California Earthquake Authority loosened up some rules around deductible options and pricing. They lowered some pricing in some areas, and it became much more affordable. So if you haven't checked into it in the last couple of years, it's time to do that. And also, I think the alternative market outside of the California Earthquake Authority is much more robust than it was.
I'll have to check that out. I kind of dabbled with some earthquake insurance. We've owned our house for 13 years now, and I had it, and then I dropped it, and so it sounds like this would be a really good time to look at that again.
Definitely.
Is there a rule of thumb on amount, like percentage of equity or something, where it starts to make sense to look at that?
I think it's a personal choice for each person. I mean, some, that's their entire nest egg or a big part of it, and they have plans to move away or do other things and use some of that money. And if the house goes down, that money's not going to be there. And who knows what, if any, assistance there will be offered and how much it will help. So it's a good idea to get it.
The thing I wonder about with earthquake insurance is something like that, where it's a broad-based disaster affecting a huge area and pretty much everybody in the area. Everyone's making a claim at once. How does the potential solvency or insolvency of the carrier affect that? And are you really going to get coverage if something real bad happens and everyone claims at once? It's going to go belly up and you don't have coverage then, or what?
It's an excellent
California has
concern,
like a backstop.
and that's a good point. The California Earthquake Authority has a provision of its existence in law that allows it to subsidize its losses through basically a broad assessment of all people in California that have a policy. So there's some ability for it to recover. I don't foresee it not being able to recover, but I know that they've had past events that were significantly, difficult for the insurance industry to hold. So they're aware of that. I think they do a lot of essentially saving money. That's why it's taken so long for them to loosen up the rules a little bit around it.
And that's where the ratings really come in as well. Is that correct?
How much your house costs and how much people are being charged based on their risk area. And they're getting better at understanding what those risks are. So as technology improves.
Do you have an idea of the rough cost of the earthquake now, like as a percentage of a regular homeowner's policy? Maybe is it 2 or 3x a homeowner's policy, or?
Yeah, it varies a lot. Like I did a recent quote. I'm gonna just say it was in Tracy, and the entire year's earthquake amount for like a $500,000 home was only $750. But at the same time, if you do it in Hayward on the Hayward Fault, or otherwise, it's going to be, saying $500,000 will be at least 4 times that, at least. So it depends. And the deductibles options change. So lots of ways to, mitigate that price.
So they're not always the standard, like 20% is what I've been pretty familiar with earthquake insurance.
No, not anymore. Yeah, you can go as low as 2% up to 25%. And you can do something called a split limit, basically, where you get half the limit.
Okay.
So what's the percentage referred to for our listeners?
The deductible.
Deductible.
One thing to understand about earthquake insurance that's probably been a big barrier for people for a long time is the deductible is not like your standard homeowner's policy where you have a $500 or $1,000 deductible or whatever. It's actually a percentage of the total rebuilding cost of the home. So to make numbers simple, if it's $1 million replacement cost and you have a 20% deductible, you have a $200,000 deductible. Well, that $200,000 deductible, you have to have enough damage above that $200,000 deductible before the policy kicks in. So in some cases, people don't see them having enough damage to essentially warrant that.
Yeah, if your chimney fell down, then it basically wouldn't be covered.
Right. Where you're mainly looking at is, foundation failures or shifting off of the foundation, the house shifting off the foundation.
Basically a total loss.
Yeah.
Yeah, we're talking catastrophic to really get the benefit of the policy in that case, right?
I think I was mentioning before we started, I met with a UCLA earthquake professional or professor with one of my clients, and he basically said that if it's bad, it's going to be really bad. That's what he basically said to me. So, anyway, large losses, lots of them. So.
Right. So it sounds like it's an option that people should be exploring with their insurance broker and seeing if the coverage would be of use to them or not.
Yeah, I think, and especially having done it in a while, it's time to revisit it.
Excellent advice.
Or another reason to leave California. Besides the taxes.
Besides taxes.
Hey, then you got to go deal with the hurricanes and tornadoes.
And we do have good weather.
Yes, we do.
All right, so we covered a bunch of topics on personal insurance, disaster preparedness, evaluating coverage, a little bit about how policies are very tailored and specific, and you want to make sure you have someone guiding you through it. Now I think we should shift to businesses. There are a lot of business listeners and clients out there. In terms of a business, when you go into them, they're going to be a little more in tune, I think, with some of the insurance needs they have out there and the types of coverage they're looking for, and they're going to probably be evaluating it more often because they tend to treat their business like a business. Do you have, again, with the evaluating coverage thing, do you have a methodology you go about or a process in evaluating levels of coverage with clients, and what are the types of insurance coverage they should be looking for when they start a business or go into business? Any tips and tricks?
Yeah, so in a big picture piece on the commercial side, we are really a risk consultant. Insurance is a way to mitigate a risk by selling that risk to the insurance company. We go in to a business and figure out what are all their risks and which ones make the most sense to share with the insurance company, and which ones should they try to mitigate in other ways. So we're taking a broader role in trying to figure out how to prevent incidents, accidents, as well as sell insurance when it's needed to try to take that away. So the process is very detailed in regards to, each industry is different too, but we're trying to figure out what is this client doing and how is this going to affect them.
So you've told some stories in the past, some pretty big wins on like workers' comp and that kind of stuff. Do you have some examples there where people are way overpaying and how they can recognize that and really cut costs?
Right. So like in workers' comp, I'll give you an example. If your workers' comp policy hasn't been going down over the last few years, unless you have a significant claim history, it should be going down a little bit. And if it hasn't been going down, it's a really quick note that it might be time to look at it again, because it's been what we call a soft market, or the market's going down. We recently saved a client basically 50%, which in this particular case was close to $50,000 from on the market of workers' comp. And that's just, he was with a payroll company that just wrote him with a policy. They never remarketed it. And he just never really looked to see what other options were out there.
Yeah, we have some contractors and some manufacturers that have some pretty significant workers' comp policies, and that's an expense that should definitely be looked at for those types of businesses.
Well, that's a great point with when they go with the payroll company. A lot of the major payroll companies or the PEOs, what's PEO stand for? The something employment organization. I forget what the P stands for.
I think it's professional.
Professional organization. So the PEOs where they kind of try and bundle up all of these different services into one thing, but you're really overpaying for a lot of stuff if you're not looking at it very carefully. And that's attractive to a lot of businesses starting out because they don't want to deal with the headache of HR and payroll and 401k and workers' comp and all these things, but they're paying sometimes a hefty premium for it.
Or maybe gaps in their coverage, right?
The big piece is it's very difficult for a lot of those in those PEOs to kind of dissect what you're actually paying for things.
They hide it.
They hide it real well. And another negative piece of a PEO is that it's also generally expensive to get out of. I think my general perspective on it is be much more responsible to look very hard into that and what the negative side of that is before you get into it. Because getting out of it can be expensive depending on which one you're dealing with as well. Anyway. But
well, you get into it for convenience, I think, and you should recognize you're paying a premium. But Michael brought up a good point. What about coverage? Have you seen coverage issues with the coverage that comes through PEOs or the big payroll providers? Or is the coverage actually pretty good? You're just paying extra?
Well, see, the workers' comp policy in the state of California, every policy is the same because it's a state-mandated policy. It's covered in the same exact way. It's more has to do with, price creep over time and claims and service issues, basically, that we see them come out of it when they realize how much more they're paying and how much their different service issues aren't getting met. That's what we get. We get the referrals coming out in that way.
Okay. In terms of policy limits for the general business property coverage and that kind of stuff, do you have guidelines there as well, like you did for the umbrella policies? Is there a certain amount of assets at the corporate level you need to be looking at having coverage, like as a percentage or revenue or what?
Yeah, so we depends on the industry, to be honest with you, because the standard business policy is starting at $1 million and goes up. And if you're selling 10 million, you're making 3 or 4 million. That's a small business of some kind. You're going to be looking at a $15 million umbrella, somewhere in that neighborhood.
At the corporate level, at the business level.
So that basically.
Now, obviously, the more you deal with autos, the more you deal with what we call risk. Contractors, those people on maybe that you have other people that work around you that are on ladders or tall buildings and things like that. That's going to be another factor that increases your risk. If you're owning a small retail store, a one-story retail store, and you're just basically having people come in and look at clothes, that's a different set of risks.
So it's very industry specific on the amount of coverage you want there.
Right. And again, that's what we're trying to do. We're trying to get involved. We want to be the trusted advisor for our clients to help them make the best choices for them. And we spend a lot of time with our clients to try to make that happen. Basically, get them to understand what their risks are and help them make the best choice they can make.
What about business interruption insurance or things of that nature? Is there certain things clients should be looking for in that arena? Things that are covered, typically not covered, what they can expect if they need to make a claim on that? So
sitting here with accountants, I love that you asked that question because they have probably gotten the business interruption spreadsheets to do over time. But there's basically a fairly detailed accounting practice that is done to determine what, for example, a manufacturer really needs to be done. But there's another process that goes along with it that our firm helps people do, and that is planning what you would do, where you would go, and as best as we can, how much that would cost. So there's a part of that is how much payroll are you going to keep? How much income are you going to lose? What are your accounting losses? And then what are what we call extra expenses? How would you get this business running again?
Mm-hmm.
An example is the manufacturing. That's very important to them because it's all of their business.
Yeah, I can imagine.
some other firms, maybe I'll use it even in the accountant area. Once you've replaced your computers and otherwise, it's a matter of where do we rent a place and we can get going. It's not as critical. But a lot of times it takes a manufacturing firm, 18 months, 2 years to replace their equipment. They can't just order it right away, or their location. It's much more complicated. So again, it's kind of industry specific, but a very important coverage, and one that it's where insurance brokers and accountants a lot of times work together.
So another line of coverage that's really in the news and popular these days is the cyber coverage, the cyber risk. Seems we're hearing about a new hack of client information on a daily or weekly basis in the news. If you pretty much shop anywhere, or you had the credit Experian one or whatever was the worst,
Right.
obviously.
Right.
But it's out there, it's happening a lot, and we hear that the hackers are being more sophisticated and targeting smaller and smaller businesses. Can you talk a little bit about cyber risk and cyber insurance and the different types of coverage that are out there that people should be looking at for their business?
Yeah, we definitely get this question a lot from our business clients.
So cyber liability, there's no one standard cyber liability policy, but there's some basic coverages that are generally available. Okay, and you're talking everything from network security, what they call the breach response, and that's your response to that breach of security, and cyber extortion, which is basically them trying to they
Hold you
load the
hostage.
computer up and say how much do you want to get it working again, and business interruption, which was a conversation we just had around business interruption. I think the one that people, they might have a cybersecurity policy if they're in an industry that's there, but one piece that's generally not included in that policy is what they call cyber crime. And that's, the CEO gets hacked, or the CFO gets hacked, or maybe even the accountant that's helping with your bookwork gets hacked, been told to send money, they send it, and the money's gone. That is a separate coverage out of cyber liability that has to be added specifically to the policy. And
we see a lot of that, but that's not covered. So that's when the AP clerk at the company or the bookkeeper gets an email from the CFO or someone saying wire this to this account immediately, and they jump right on it. And if they don't have good internal controls, which Michael can talk about, that they're going to get bit there. But two, that's not covered under the regular cyber liability policy either, unless specifically added.
right. Another, that's exactly right, and I think it's really important from a whole risk strategy piece is that working together to, they're getting so good at making it, look appealing for you to click on something that doesn't look like it, doesn't look like it's something that's going to steal from you, but it will. A lot of these insurance companies now are offering training, experts to help try to build training programs to prevent it, essentially, in a way.
If you take training, or if you go through a bunch of steps to put good internal controls in place, can that help reduce your cost of coverage? Because that's something you and I have talked about in the past, where you help your clients go through a process of trying to reduce the premium cost by demonstrating to the carriers that this person is lower risk because they're taking proactive steps.
Correct. I mean, that's part of it. Is like we make a submission every year to the insurance company, and we include in that what things that we try to do to get the client to appear better in a lot of cases, and to be better to the insurance company. Lower risk, lower price.
Yeah, we work a lot with our clients on internal controls, and I do want to just mention for any of our bookkeeping clients out there that we do have very strong internal controls within our firm. We do a two-step authentication. So if anybody's ever asking us to wire funds or to release a check or a payment, we're confirming on the phone or other means. So just want to cover that.
Yeah,
it's important. Yeah, I mean it's important, and that's the quality of the people that you work with.
Yeah, because we've definitely gotten emails like that, and our processes have worked to stop those.
I've gotten it several times myself, where I've gotten emails from people I know, and when I was on my iPhone at home, I got an email from a banker I knew saying, can we talk? And I'm like, well, sure. I'm at home though, so call me on my cell. And then the email back was, oh, well, I can't talk right now, but I need to do a wire transfer. And I'm like, this is weird. Not normal. And sure enough, I click like with my finger on the person's name on the iPhone, then I can see it's like a fake email address. It's not a real email. They're a bank, but it appears on the phone like it's just their name. So it's very similar and close. And we even had an employee here that came down to my office one day and says, okay, where do you want me to send the money to? And I was like, what? And then we determined someone was trying to email her, pretending to be me, to send money. That's why we have those internal controls in place where we do the verification to make sure that something doesn't get sent inadvertently, because once you send a wire, you can't get that money back. It's gone.
Right. So yeah, I mean, that's again, they're getting more sophisticated. It has everything to do with internal controls, training, and having the proper coverage to cover you in case a mistake does happen somehow. So those are all the components that happen. Every industry, a lot of times they'll have different options in cyber, but if you're buying your cyber liability policy through your, what they call your package liability policy, you should reconsider it, because it is a better option to buy it standalone in most cases.
And in terms of coverage in a cyber liability policy, if your business does get hacked and hackers get access to customer or vendor information or stuff that you don't want out there that you're trying to keep internal, what are the types of stuff that do get covered when you make a claim? It's the PR stuff that gets covered. It's all the work you got to do to buy like identity theft protection for people and that kind of stuff. Or what are the things that get covered?
You have to follow the law around purchasing notification. Okay, and the couple of years worth of ID or making sure they are not getting hacked. You have the response, the crisis response that's covered, and that's how you're going to deal with it, and then your PR piece of it. And in some cases, it's your defense costs. You might get sued for, this is still a very new area of law, and there's still a lot of suits out there that just haven't been totally settled in the courts, and exactly who's going to be liable, how much it's going to cost them, and all of that is still very new. And there is portions of this is coverage for it. If you haven't followed your internal controls correctly, you're likely to get sued for that. And there's coverage in these policies that would help defend you in those cases.
As a small business owner or a smaller mid-sized business owner, you have so much on your mind. The last thing you want if some sort of crisis like this happens to have additional things to worry about. So this coverage can help deal with some of the PR and crisis management type stuff that's really important in dealing with that and notifying all your customers and vendors. But
the right product will provide it for you and provide the expertise for you. So if you buy the right product, it's a completely different experience.
Oh, they'll actually help provide you the resources to manage the crisis. And also
they will bring in the crisis managers and the whole process and help you to PR firms, the whole deal.
I want to go back real quick to the part about putting controls in place and trying to decrease your risk profile to lower your premium costs. What can you quantify for our clients how much savings we're talking about by putting in some of this proactive work? Because we would all love to cut costs, and cutting insurance costs would be a great thing because it feels like you get no tangible benefit year in, year out for that expense. So how much are we looking at reduction for how much work? And should every business owner be looking at some of these things to try and reduce their premium costs?
Well, obviously, the more you're paying in insurance, the more it'll pencil out to make sense. And it does generally take a year to 18 months, depending on the exact renewal dates, for you to be able to essentially prove it to get the more what they call credits, basically. But I mean, literally, it can be 30, 40%. Depends on the industry. Depends how much you're paying. If you have a really small business, maybe a retail store where you're only paying $3,000 or $4,000, it's going to be more difficult. But if you're paying anywhere, $50,000, $100,000 in insurance premiums,
it's probably worth it.
And how much work are we talking about to put some of these programs or training in place?
It depends on exactly what coverage we're talking about, but a lot of times we will help them put it into place. It's just a matter of management desire to do it. It's generally not a overly costly piece. It's a tough question to answer with a specific number, but it's worth it. It's worth at least having the conversation.
Is it more in terms of employee downtime and dealing with the training and that's
employee
the cost?
downtime? Everything. Let's just take workers' comp for a contractor, just real briefly. There's weekly meetings that they're supposed to have.
The safety meetings.
Safety meetings, and they may not in a lot of cases. It's how to actually make those meetings mean something and beneficial for them. Say the contractor, let's say a medium-sized contractor that's $100,000 in workers' comp, could save them at least $30,000. Probably take 18 months to truly get it to be in that place. It's a lot of money, and it doesn't take that much time. It's just a matter of truly implementing the process that they're going to have this meeting and how to make it enriching is a big piece.
Training and implementation.
Exactly.
So in closing out, do you see any trends in your industry, in the insurance industry in general? You talked a little bit in the past about how automation, that kind of stuff is affecting your industry like all others. What are some of the trends looking forward here in the insurance industry that
just to back up, just one trend that we're seeing immediately right now is, a lot of auto carriers, both personal and commercial, have really what we call tightened up their underwriting guidelines, meaning that prices are going up and people's willingness or the insurance company's willingness to write different companies, whether they're commercial or even personal, is changing. So in the short term, people will see some rising auto rates. And a lot of times when you have this kind of market for auto rates, you may be with an insurance company that essentially they're still offering you renewal, but they don't really want your business. And so they make those rate increases pretty significant.
Starting to price you out.
They're trying to price you out. They're trying to get you to move. So it is something that you get one of these shock numbers, it's time to look at that because that is a trend within the industry. But in the follow question in regards to where is the insurance industry going, I think the big picture is they're going to try to use big data to try to understand their risk better and try to price it better. And at the same time, they're going to each insurance company is going to try to develop a relationship with the client better. They want you to see them more than just a price, and they want to have a relationship with you.
So the insurance companies are going to try to profile you a little more and then sort you out into different buckets of risk, basically, and price you accordingly. And as a broker, your jobs are shifting more towards how to make us look the prettiest. Right, for all the different carriers out there.
We're trying to, at the beginning, to be all frank, in the beginning, it's making you look prettier. In the end, we hope that if we're a good partner to you, to actually be prettier.
Sure.
Very nice.
So,
makes a lot of sense.
That's all for today's episode of Debit This, Credit That podcast. As always, if you have any questions, you can contact your Wheeler Accountants Preparer or submit a question online at our website in the Ask Wheeler section at the bottom of the page. Please remember to follow us on social media for regular updates at Wheeler CPAs and on LinkedIn and Facebook. Thanks for listening as we help you solve for accounting.